Today, I'll take you through the process that I go through every single time I place a trade. I'm a firm believer in preparation as a trader because I understand that we have very little to no control. And so the things that I do control, such as my preparation, my risk management, and things of that nature, you better believe that I'm going to double down on. So this was actually a trade that I had taken a while ago, but the first thing that we'll talk about is my overall layout. Here on the left side, you'll see my trading views. Sometimes I'll have my trading view split into multiple different screens if I'm watching multiple assets at the same time. However, for this specific trade, I did not really need to monitor any other asset. Now, the top right, you'll see my exchange. That is where I actually place my trades. I'm using the toobit exchange, which has a very simple and easy to use interface. Their support team is great, and you can get a free 50 USDT by simply signing up with the link below. Now, on the bottom right here, you'll see my pre-market game plan and my trade journal. So I will typically have all of these windows open when I am trading. Of course, I'm going to need my exchange open to be able to actually place my positions. I'm going to have my pre-market game plan open so that I can refer back to it if I need to. So let's go over May 11th where I shorted Solana. It was a textbook setup for me, and we'll go over the trade itself as well as my pre-market game plan and my journal. So the first thing that I do is write my pre-market game plan. Okay, I have a whole video on my entire trading plan, so if you don't know it yet, I would highly recommend that you go watch it. So the theme of market, that's the first thing I write down, and it basically includes the economic data for that given day. Now, of course, I use the Forex Factory economic calendar. There's a bunch of different calendars that you can use. I've used Forex Factory for the longest, so that is the one I'm going to advocate for. Now, again, on this day, it was a Sunday. There was not a lot of economic data, and so that's exactly what I'm going to write. Today's a Sunday, which means no economic data, expecting low volatility and little to no opportunity. If my system appears and I place a trade, I will seriously consider my risk approach and risk less due to it being a Sunday with no economic data. So typically when I am day trading, I like trading volatility, which means I like trading on days where there's a lot of economic data. This was not one of the days with a lot of economic data, and so I am going to reconsider my risk approach. The next thing I do is a pre-market screenshot to figure out whether I was right or wrong about my overall idea. It is very convenient for my growth that I try to predict where the market is going to go pre-market, and then I compare the aftermarket result with my thinking pre-market. And so that is exactly what I use a screenshot for. Okay, the next thing is key levels. This is basically where I write down all the key levels that I'm currently watching. So on this very day, I wrote down 175.04, biggest short opportunity of today, and that is the high that you are seeing right here. The next one is 177.86, another big short opportunity if the market rebalances higher before moving lower, which is the one that you're seeing up here. And the last one, 168.74, is a potential target for today as it's a large unmitigated imbalance, and that's the line that we're seeing down here. So the reason why I write down my key levels is because when the market then approaches those key levels, I am going to have so much more confidence in executing to or from those key levels when I have watched them pre-market. Another thing that's really important for you to understand, and the majority of the reason why I actually keep a pre-market journal, is because my thoughts pre-market is rational thinking. You simply can't trust your mind as a trader once the market is open, because as soon as you have an opportunity to actually place a trade, your mind starts telling you things that's not really there. And so that's exactly why I keep this open while I'm trading, so that I can refer back to my rational thoughts. So let's say that the market is now open and I am planning to take a trade. Maybe I say, well, I'd like to take a trade when we sweep this very low that we're seeing here. I'm then going to refer back to my pre-market game plan to see if that was a key level that I had mentioned. Because chances are, if I did not see this pre-market, it's simply not a level worth noting. The next thing I like to do is write down the different scenarios that I could see happen today. So for example, if I on a given day could see the market going higher, but I could also see it going lower, I'm going to write out both of those scenarios. The reason I do that is because if one of those scenarios appear on the actual market, I'm going to have way more confidence in executing that scenario. So on this very day, I wrote, the only scenario I see for today's market is a move lower. I'm heavily anticipating lower prices due to the technical aspect of the market. It truly reminds me of a market maker sell model, and we're seeing great sell side target at 168.74, which is the daily unmitigated imbalance and the end of the market maker sell model. So on a day like today, I was not really confused. I only had one scenario in mind, and that helped me out a lot. But again, it's important for me to write down, because if I am right about my scenario, I'm going to have a lot more confidence in executing that scenario. So the conclusion of everything is I am bearish overall, but because it's a Sunday, I will reconsider my risk approach and likely risk significantly less than I normally would. I'm expecting today's market to be a sell side continuation down towards the daily unmitigated imbalance at 168.74. So that was exactly what I was expecting from today's market. And again, I will refer back to my key levels. Biggest short opportunity of today was 175.04. And this is something that I wrote down pre-market, which means that when the market then approached that level, it was a level that I had looked at for a long time. And so I have no problem in trying out that short that I had been looking at for a long time, because I know it's a high probability setup. And so even if the trade ends up being a loser, I know that I did nothing wrong because I followed my plan. But again, that was exactly what I did. I shorted the very high that we're seeing right here. Now let's go over why I shorted that high. I have two primary models that I use when I trade. One of them is a reversal model and the other one is a continuation model. In this very example, I was using my reversal model, and that consists of a fair value gap and then a high being made within that imbalance. Now the key part here is that the high that's being made inside of the fair value gap does not fill the entire inefficiency. The reason why that's important is because if we then make a new high, I'm going to assume that that high is only being printed in the market to fill out the inefficiency which the first one failed to fill in. So again, in an example like this, the high that I am planning on selling did not fill the entire imbalance. And so when a new high is created, I am going to anticipate that that high is only being created to fill in that little bit of inefficiency which the first high failed to fill. So my short is going to look something like this. I'm going to refer to my journal to figure out exactly where I put my stop. That was 175.98. So let's find that. 175.98. There we go. Okay, and my take profit was 172.29. Let's find that. And there it is. So this was the trade that I was looking at, okay? This was the trade that I wanted to take. And again, the reason why I wanted to take this was primarily because it was a setup that I had been looking at pre-market. So the overall idea I already went over. We're essentially waiting for that high to get swept, and we are going to assume that that acts as a liquidity sweep because the first high failed to fill in the full inefficiency. Now, in this very trade, we can also see here on my journal that I went break even at 173.31, which is an internal low, and it is the low that we're seeing right here. So that right there was my break-even point and my partial point. Now the reason for that is because I view that as a zone that could potentially start to make the market move against me. So again, it's a swing low, it's an internal low, it overlaps very well with the optimal trade entry, and so this right here is something that I would classify as a reversal zone, and that's exactly when I want to move my stops to break even and potentially take a partial. A lot of people don't really know when they should move their stops to break even or when they should take a partial, but let me tell you a good rule of thumb. You want to move your stop to break even and potentially take a partial when price reaches a target that could potentially make the market move against you. So that's exactly what I saw with this internal low here, but let's go ahead and play it out and see exactly what happened. And as you can see, it was a very stress-free trade. It did not last very long. And what I like about my reversal model is that I will very fast figure out whether I am right or wrong. It will either hit my stop loss very, very fast, which is right here, or it will hit my take profit very, very fast. And so there's very little to no stress involved. If I refer back to my journal again here, you can also see that I said, not a lot of emotion involved, executed my system when it appeared and walked away with alerts. So I will walk away and then I will put an alert at the low where I want to move my stops to break even. That way I ensure that my emotions are not going to get the best of me. And so that's another good rule of thumb. If you are a person who has trouble managing their trades because of their emotion, I would highly recommend that you set alerts in the spots where you want to manage your trades and then you simply walk away. That way you are exposing yourself to as little risk as possible. The longer you sit in front of your screen, the longer you're exposed to risk. Now let's quickly go over my journal and what I write down. I write down the instrument, this was Solana, the position size, the day, the time, the fundamentals and seasonality, which I primarily use when I swing trade, not when I day trade. We have the technicals, which again, like I told you, was my reversal model towards the sell side. my take profit price, stop loss price, and entry price, how long I was in the trade, when I went break even and why, where I took my partials and why, my emotions when I was in the trade. Typically, I'll post an image of the trade itself right here, my overall P&L for this very trade, and then my post-trade thoughts. So that's essentially what I will write down in my trade journal. Now, something I will do in addition to all of this is open the Stickies app if you're on MacBook, write down your thoughts while you are inside of a trade. So in this example right here, when I was in this trade and it was actively moving up and down and my P&L is moving up and down, I'm going to write here my emotions. I'm going to write my thoughts. I'm going to write everything down that I'm currently thinking about while the trade is active. That is a trick that I learned back in the day from a guy called Umar Ashraf. I remember seeing him doing it, and ever since then I have tried it, and I think it is a great way to understand your mind while you're inside of a trade. So again, if you're on Mac, open up your Stickies. You could also just do it in hand and write down exactly what you're thinking when you're thinking it as the trade goes on. Because it's one thing having a trade journal that you write in after the trade has already played out, and another thing writing in a journal while the trade is still playing out. You'll notice that your thought process post-trade versus in-trade is very, very different, okay? So I'd highly recommend that you go try it out. So that is the entire process of me taking a trade. You saw my entire layout and exactly what I do before and after I place a trade. Remember, preparation is key. You're competing against people that are very, very smart. You're competing against people that are very, very prepared. And so if you want to have a chance of winning, you better come just as prepared, if not more prepared than they are.